This JTS Mortgage Minute is brought to you by JTS & Company Mortgage Brokers.
Welcome back to everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you.
Good to see you, Bill. Yeah.
You know, a lot of times we see ads or hear people talking about reverse mortgages, but unfortunately a lot of us don't really know what a reverse mortgage is. And not knowing what it is and what benefits it can offer seems to be a problem with the older generation.
Yeah, I understand. Sure.
Can you enlighten us?
Yeah, you know, reverse mortgage is really a neat product. It's something that's been around 25, 30 years now, and it's really a great opportunity for seniors to utilize it. It's simply a mortgage that allows you to access the equity in your home and use that to provide some income, some additional income in the home, or maybe take out some distributions on a monthly basis or in a lump sum, or even set up a line of credit. And there's still one of the things that we battle is that people, a lot of misconceptions. One of the big misconceptions is that people think they no longer own their home, and that's not the case. You still own the home just like you would in a traditional mortgage. You can still sell it. You could refinance. You still have all those same opportunities for you. But the nice advantage of the reverse mortgage is you're not required to make that monthly mortgage payment if you don't want to. So if you're trying to free up some additional cash flow in your monthly budget, we all know that cost of living continues to go up, but our fixed income doesn't always go up at the same pace. So it's a great way to access some of the equity and use that to provide either, again, additional income or maybe take some cash out, do some home improvements, and on top of that, set up a line of credit that's really got a nice growth rate on it.
You talked a little bit about how they work. Are there different types of reverse mortgages?
You know, there are. The most popular one, though, is what we call the HECM, or the Home Equity Conversion Mortgage. That's backed by the Housing and Urban Development Department under the FHA program. So it's a government-insured loan that gives us, the lender, some insurance on that. So it helps protect things. It makes it a non-recourse loan, so heirs are never affected by a balance if there was owed more on the home than what you borrowed. But by the same token, most cases when you no longer own the home as your primary residence, or you're occupied as your primary residence, there's usually enough equity there that's going to pass on to your heirs as well if you sold the home. So you can take whatever equity is left and pass that on if there is any.
Is there a difference between a reverse mortgage and a home equity loan?
Yeah, you know, a home equity line of credit can be a good option as well, but it's a home equity line of credit is going to require a monthly payment. It's a lot of times they're on a fixed period for a certain period of time, and you can draw on that as you know over a certain period of time, and then it becomes you have to start paying it off. It amortizes. But with a reverse mortgage, you can set up a line of credit, and after the first year, you can draw on it as often as you need to, up to the point you've expired the line, of course. But just a lot more options for the senior inside the reverse mortgage than with just with the home equity line of credit.
If they receive a reverse mortgage, will they still have an estate to leave to their family?
Well, they could, and that's what we were talking about earlier. You know, they could so let's say that someone had a reverse mortgage and they owed $100,000 on it, but the home was worth $150,000 and they sold the home for $150,000. Then in essence, there's $50,000 worth of equity there that they could pass on to their estate or their heirs, just like you would under any other mortgage. So again, the misconception is I've sold my home to the government. That is not the case. It's just another type of loan that offers the senior additional benefits that a traditional mortgage doesn't.
Can you use the money for anything, or are there guidelines?
Absolutely. You can pull them, you know, if you need to do home improvements to the home, if you need to retire some debt, if you want to just pull some money out to have some additional cash on hand. Whatever you want to use the money for, it's up to you. It's yours. It is a loan, just like any mortgage.
All right, Jeff, good information as usual. Let's remind everyone that if you missed last week's segment, you can always go to JTS & Company's Facebook page. And if you want more information, visit their website at jts-co.com. or give them a call at 329-9090. Jeff, good to see you.
Yeah, good to see you, Bill. Thank you.
Take a break. Come back with more in just a moment.